Hello, Culture Matters podcast. Today, I'm very excited to introduce you to our guest. But before I do that, here is a short quote to kick off this episode. Quote, interest is not an accidental historical legal category, which makes its appearance only in our individualistic and capitalistic society and will vanish with it, but an economic category which springs from elementary economic causes, and therefore, without distinction of social organization and legislation, makes its appearance wherever there's an exchange between present and future goods. Eugen von Boomberg. I don't think I'm pronouncing that right. See, we believe here Culture Matters, where people read to think, write to develop, listen to hear what is unsaid, and speak to let go. They develop more value for themselves and others. So our purpose of this podcast is to uncover the genius of our guest with the goal to make you, the listener, your curiosity cool. Because our vision is that human culture is open, curious, and focused on creating the future. So our mission is to read, write, listen, and speak every single day. It'll be easy to do that today with my good friend, Jonathan Fodera, who's been on the show, episode 92, season 9, I believe, about last year. Check that episode out. It'll be a completely different conversation. For the last, well, more than a decade, having studied economics, Stony Brook, been in the operations and sales and business development, and now owning organizations in varying industries. Jonathan is the CEO of Integrated Business Financing, super smart guy, has lots of his own contrarian ideas. Follow him on social media. He's got a podcast and show, and he interviews people as well. And thank you for coming on the show. I will read the quote again, and there's some questions that just about it, but we can talk about a million things. Thanks for coming, brother.
Man, thanks for having me. I'm excited.
So the first, now this is the reason I read the quote. This guy created Austrian economics. So I want to ask you, this whole idea of interest is not accidental, but basically he's saying makes its appearance wherever there's an exchange between present and future goods. What do you think about that? This idea of interest, or do you have your own way that you've interpreted interest? Because, and the reason I'm asking that, of course, is because you essentially help business owners get capital, and help me if I'm bastardizing this, get the capital they need to grow their visions. And with that capital that they need, that they get through you, there's an interest. And some people say interest is the devil, or interest shouldn't exist, or it's too much, or it's too little, or like, and there's so much to it. And then obviously, so that's kind of, I thought, let's kick off this conversation.
Yeah. So
talk on interest.
Yeah, let's get to that. So the difference between
good morning.
Good morning. The difference between present and future value, right? And I think what he's trying to say is that's really the delta, right? Is the interest, because a lot of times money today could be worth, well, the way our government prints it, it's obviously always going to be worth more today than it is in the future. The interest kind of makes up for that gap, right? And depending on how someone is, how their credit is, how their business profile is, how well put together, well-rounded the business is, how profitable it is, that also drives what that interest is going to be. So laying it all out there on the line like that, all that really matters, interest is a part of life, right? That's the cost of doing business. What matters is when someone goes and looks for financing, they need to check two main boxes, and then obviously get the best terms and deal possible. The first box is, does what they're doing with the funds exceed the payment, the monthly payment, right? Because that would insinuate they're going to have free cash flow or increased cash flow, that cash flow positive. And then the next is, if they added up the total cost of the funds, right? If you ever did this with a house, you'd realize that buying a house it may not be the best investment, right? Now buying a house for a rental property, excellent investment, but I digress. If the cost of the capital, if they're bringing in more money in profit than the cost of the capital, they check that second box, meaning now not only are they cash flow positive, they are positive overall on this transaction, and they should do whatever they're doing, buy that piece of equipment, take out that loan and put it into marketing, or use that line of credit to get more inventory or expand a different line. Now, obviously, after those two boxes are checked, they want to find the best terms, but I see a lot of people that try to borrow that doesn't check those two boxes, and they should not borrow. No one should ever borrow to solve a problem that they don't know the answer to, right? Meaning they should not take money to stay open, right? If they don't know why they're bleeding cash in the first place, because you only take money to address a need. Now, in these times, though, there are arguments to say, hey, I should probably take money because we are not in a great time, and I want to have cash. I want access to cash. And these are some of the things that I have been going over and discussing with entrepreneurs in these very uncertain times that we're in. And by no means do I think they're letting up anytime soon.
I want to go back and make sure I get my head around this for these 3 box checks.
Two
Is
boxes.
the first box that you're saying check is it cash flow, or is there more coming in than going out?
Correct. Is it going to be a cash flow positive transaction? Meaning, if somebody needs to get a piece of equipment, right? Let's call it a ditch witch. That ditch witch is going to have a payment of $3,000 a month. If they are bringing in excess of $3,000 a month because they have this new ditch witch, that checks that box. Think about it like this: if that contractor is renting that ditch witch and it costs him $1,000 a day, and he's renting it on average 10 days a month, it is better for him to own that piece of equipment than for him to rent it.
And you said 1,000 a day, 10 days a month?
Yep.
Is that because the difference is that's 10,000 a month versus 3,000 a month?
Correct.
And so theoretically, that person would have a difference of 7,000.
Yes.
And then that is 84,000 in a year.
Correct.
That's a lot of purchasing power that's gone.
Correct.
Now, is the second box, was the rate sufficient? So, for example, if the interest rate would be too high, even if it cash flowed theoretically, because of the cost of someone else giving it to the person, because someone else has to basically lend the equipment for a period of time based on they're saying, hey, this is mine, but it's kind of yours now.
Yeah.
As long as you pay me. So then the checking the box too is the interest rate dictates whether it's still going to be cash flow positive based on that ownership, which you own it, but you kind of don't, but you do.
Yeah.
I guess you own it culturally, but you don't own it
outright
until you pay it down. Is that
correct?
Kind of one way of looking at it?
Yes, correct.
So in terms of the second box is it still profitable after the interest that's attached to this deal? Is that what you were saying?
Yes.
And this is a way that people, if they're thinking of their businesses, what's happening to them? I want to just deviate for a second before we go back to if someone listening to this is starting to think in these terms with their business, what kind of advantage or disadvantage, or maybe it's hard for them to have friends. No, I'm just kidding.
Yeah.
No, but what are some advantages of thinking in these ways as a business owner?
Well, you're going to be less prone to make mistakes, right? So most people do things based on emotion. The emotion to either have they either do something for gain or fear of loss, right? And a lot of times, all of us are guilty of acting out of emotion. What I try to do is, yes, somebody wants a new toy, new piece of equipment for their business. I understand that. I also try to break it down for them logically. And my whole team does this. All right, this piece of equipment is going to bring you in an extra, call it $10,000 or $20,000 a month. That's great. one of the questions we'll ask is, well, how much of that is profit, right? So if there's, let's say 20% profit, they're bringing in 20K, that's $4,000 a month, right? So we will actually break this down and make it make sense. And if it doesn't make sense, we'll say, hey, this is kind of what you're looking at, because we don't want to put, our mission is to help business owners and support small business owners, right? We are the backbone. Small business owners are the backbone of this country. Without
Is
it,
there a level of sensitivity in the line of work you do, in the sense that if in theory the company, if someone in your shoes does not dig deep enough, the business owner can buy in a piece of equipment, or any business owner can basically get a loan for anything they think is going to give them more revenue, but ultimately, because their operating margins aren't, they wouldn't be where they would have needed to be for that piece of that investment, that asset, to produce more money.
Yeah.
So you have to dig deep and figure out, in theory, what's really going on in their business to know if they can even afford to do it.
Yeah.
Or there's other people out there that just would give them the money because they
don't care.
They get paid. So
Yeah,
can you unpack that a little bit? Because that's one of the first things I think of. Like, if you don't figure out what their margin is on whatever they're doing with the equipment, then they could potentially get something that they actually could put them out of business.
Yeah, typically
Theoretically.
they should be able to smooth it out with equipment, because they'll be financing it over 3 to 6 years. But some of the shorter term stuff, they can step on landmines and not know it. And we try to avoid that, because here's our theory. If we do the right thing, that comes back to you. And when you help people and you keep them in business and keep them growing, that word spreads. And that has been how we've generated 95% of our business, versus you just handing out cash and not going through it with anybody or actually analyzing it. So what we do, and I wish I could show you on the screen, we use the same software the banks use, right? To go through the last 6 months of data. And we get a soft credit pull, a business credit pull, and then we do a cash flow analysis. And everything we do is based on that, unless it's SBA, and then we'll go back through the last 2 years, 3 years of returns, and kind of show them what everything looks like, explain it to them, because banks don't do that, right? And then we can kind of say, hey, Jay, what happened in January? Your average daily balances dropped, 50%. Your revenue dropped, 70%. What happened there? What caused that? Right. And we kind of show how that leads into the rest of the process. And by doing a very, very thorough analysis and explanation, and trying to educate them on, hey, these are kind of the baseline metrics that you want to hit to be able to get into any program. And then it's about matching up the program to what you're trying to accomplish as an entrepreneur. So you're trying to consolidate debt, or buy a business, or you're trying to buy a building, or you just need a lot of cash on hand because you're in uncertain times, that's an SBA loan. If you just need short-term stuff like inventory, supplies, payroll, and when I say payroll, I don't mean covering payroll, I mean adding to your team, right? Or marketing, that's a line of credit. If you're always net 15, net 30, net 60, and you're constantly waiting to get paid, and that's the only thing holding you back from growth, well, then you need to set up invoice factor, right? If you need equipment, it's equipment finance. So what we do is we break down what their challenges are, what their roadblocks are, where they stand, and what they need to get across the finish line and do it successfully and smoothly. And then something else that we do a lot of is, if somebody doesn't check the boxes needed for a program, we'll send them to a reputable company that will actually go through and fix it. So if somebody comes in like, hey, I want an SBA loan, but they're at 650. All right, cool. You got to go see my buddy over here. He's going to help you get your credit up. Once your credit's up, we can work on the SBA loan. So we want to make sure that they're in the best position before they even go through the entire process, because the entire process, depending on what program it is, could be as little as a day, could be, 2 months if it's an SBA loan, 3 months.
Do people leave money on the table?
Dude, I think I leave money on. I know I leave money on the table.
I'm curious. What do you mean by that?
Well, we could be selling anything and everything. We don't do that, right?
Hmm.
So and there's even programs that we won't offer because we know long term it's not good for the client.
How much is that is tied with the philosophy of integrated and you
It's
wanting to be what you believe in?
it's 1,000% tied in. There's no separation there, right? So we've actually we've I don't want to say edited, but we've gotten rid of people in the past because we saw, some trends, right? Because if we're saying, hey, we're the go-to, we're going to help you, we're going to support you, and somebody, one of the outside advisors gets commission breath, doesn't, that doesn't really align. Because what we feel, again, in the long term, do the right thing. If you help people, that comes back to you. You can build your business on making an impact versus just making the highest amount of revenue and margin. You're usually going to be way better off if you can have everything aligned the right way.
Can we talk about some of the products that you don't think long term are
Yeah,
good,
sure.
or is that
Yeah. So there's a program out there called credit card stacking. It's probably not called credit card stacking, but what they'll do is they'll advertise 0% for 12 to 18 months. And so what they do is there's no proof of revenue. Anyone can do this. This is not rocket science. What they'll do is they'll go out and they'll apply for them using VPNs, credit cards that are 0% for 12 to 18 months. Then they have the access to the cards and they can do a cash withdrawal. Well, you do pay a fee for the cash withdrawal, and these guys usually charge 10%. Think about it this way. If I were to go out and take 150,000 on credit cards today, right? Yes, I have 12 months to pay it back, but if I don't pay it back in those 12 months, all the interest is retroactive. That's number one.
retroactive, meaning it had accrued over the year and a half?
Correct. They give you 0% if you pay it down by that time. But
what would be the percentage rate? I'm sorry. Go tell the story. I'm sorry.
No. It's fine. No, I like the question.
Fascinating.
I won't know you don't know what the interest rate is until it's approved, right? So it could vary based on credit. There's no set one, but here's the challenge, right? If you think that's bad, what's really bad is most of these people that are going through this are startups or newer businesses. And so the problem is when you take out that much on credit cards, those are short-term revolving lines. It destroys your DTI, your debt to income, and tanks your credit. So let's just say you take this money, in 6 months, your credit's going to be trash. And then if you come back to me and say, hey, I need more money, or this didn't work, or I need it, you're screwed, right? So those are some of the programs that we've kind of avoided in the past. And even when we have to go to more challenging programs, like, most of our business today, SBA equipment financing, lines of credit, invoice fact.
But can we just use an example real quick? I just want to get a little bit deeper on that for a second. If it would a 20% APR be would that be abnormal for something like that?
For credit cards?
For that specific thing, like this example
yeah, I mean, I would say probably you might see them anywhere from 14 to 25.
So let's say it's 20%. Does that mean if you take the 150K out and then you don't pay any money for a year?
Well, you would pay minimums, but
you would pay a minimum.
Yeah.
And a minimum could be what, maybe 1% or something, or less than that?
It would depend on the card, but let's just say, because they take out multiple cards. It's not on
0.1%. Oh, it's multiple cards?
It's multiple cards.
And the multiple cards have an accrued limit of 150, basically?
Yes. Yeah. So what they'll do is they'll say, all right, Jay, they'll apply you. Let's say if you needed 150, they'll probably apply you to like 7 different places, right? 8 different places. You might walk away 5 cards or 6 cards for like 25K each.
Interesting.
Yeah.
But essentially after a year, let's say, and it's 20%, would that mean that if one's 30, that's 6K in the year, it's 500 a month kind of accrued? Is that how that works? Or is it 20% a month?
Credit cards would be interest accrued for that month, right? That compounds. Like if
So at the end of the year and a half, I would think that someone could potentially owe 300,000 or like 200K, like the 150 plus 50K in interest.
It could be, but I don't want to try to do calculations on this show because it will definitely hold us up.
Yeah.
It's substantial. Like think about back in 2008, right? When we had the first financial crisis. One of the things that they came out with was they have to be more transparent with credit cards. So what they did was now in your statement, you typically see in each statement, they'll basically run through and say, all right, if you have a balance, your balance is 5,000. If you pay the minimum, they'll give you the minimum payment, whatever it is. It'll take you, let's say, 15 years to pay this off, or 10 years or 12 years to pay this off, and you'll pay back like 23,000, something crazy like that. If you pay twice the minimum, it only takes you 7 years to pay off, and you'll pay back, let's say, 15 or 12,000. And then if you pay, I don't know, 5x the minimum, it'll take you 5 years. And they gave you that breakdown and 3 different scenarios, and it just showed you how expensive it is to continuously carry balances and just pay the minimum payments on credit cards. So that's something you want to try to avoid.
Powerful. Do people even know these things?
I don't think so. I don't think people look, right? Like I looked because I knew it was there and I wanted to see it. But for the most part, people don't look, and nor do they care because it's so convenient.
Do you think there's a fear or anxiety element in it?
I think there could be, absolutely. I could tell you that even me, as knowledgeable as I am, there has been certain times that I have not wanted to check certain things. I do, but
I can
have
relate to that.
Yeah.
There's a long phase where I would put the debit card in or whatever it was and just be like, I hope this shit works. Or like years where I was putting $5 in the tank. Now Jenna's like always, why are you fill it up all the time? Because I was like, it's psychologically damaged from $5. Being, filling a gas tank up, it's like, it doesn't mean anything today.
Yeah.
Like there's a psychological, I think I have PTSD from gas. So if I'm being honest.
Yeah. Yeah.
Like, well, this is psychologically. I have a question. Do you think that the credit card side of things is like the potential negatives of credit card balance or interest, accrued interest, is that like the inversion of what all these pundits say about you got to invest for the long term because of Einstein said compound interest is the 9th greatest wonder of the world or something of that nature. You hear these statements about invest for the long term, your money compounds. So is it the inversion of that?
Yes, absolutely. It's that version for the banks. It's that version
can you
for the
unpack
issuers.
That? 'Cause I think it's like a great way to really get this stuff.
Yeah. Well, think about it like this. If I'm using 5,000 on a credit card, right, and I'm just paying the minimum back, and it's going to take me 12 years to pay it back, and when I do, I'm going to pay back 23,000. Think about who issued me that card and is doing that funds. Okay, to lay out 5K to make 23K is an amazing return, and that's assuming that person doesn't use the card anymore, and they never do. How many
years is that?
I'm not sure. I'm throwing out fictitious things here. Yeah, this is not. I would not quote any of what I said, but the data is that staggering when you look at it. And anyone can do it. Look at your most recent credit card bill. It should be in there. I want to see if I have one. Here's the problem. I pay my cards off at the end of every month. Now, the flip side, I'm not saying, and I want everybody listening to this, I'm not saying credit cards are bad. Okay. credit cards are a tool like anything else. And if you use them the right way, it's actually pretty incredible, because what they're doing is they're giving you free money for 30 days in addition to points, okay, or whatever reward it is. Like if I want to fly somewhere, Jay, I don't shell out for that. Okay, I have the highest status at Delta, JetBlue, and I did at American for a long time, and I stopped using them. But I don't pay for travel. And I don't pay for travel because my company spends so much on credit cards and they get paid off at the end of every month. So I have a free 30 days afloat. I get the points. If you're using Amex, you get, crazy points there. And so I use it as a tool like anything else. Any financial instrument, any financial program is just a tool to do a thing for your business. Now that, depending on what thing you need done, dictates what tool you use.
And how important is the educational piece in making the tool become a weapon in your hand that you can use versus a weapon maybe in your hand that backfires?
Yeah.
I'm thinking like if you have a sword and
Yeah.
you don't know how to wield it, you end up chopping your own head off.
Yes.
So
It's the same thing. That's a perfect
that's the point of
analogy.
integrating.
Yeah, it's the perfect analogy, right?
You don't want to be integrated with the sword in your stomach.
No,
You want to be integrated in the sense that you are able to wield the sword
correct.
and protect your family or
Correct. Protect the business, protect your team, protect your employees, and still make that impact. That's huge.
see. If we go back to the quote, I just want to make a point here. Have you ever heard of this guy? I never heard of him.
I haven't.
But I had never heard of him. I want to shout out to an audio book on an author, Mark Spitznagel, that I think you would love, and the audience. He has an investment firm, and I was listening to one of his books, and he mentioned this guy, and this guy was the founder of the Austrian School of Economics.
Mhm.
And what he's trying to say also in that is basically I think he was responding to this idea that to more of the side. Well, it's kind of like what's going on now in our country. He responded to Marx,
Yeah.
in a big way,
Yeah.
saying that you missed the boat here. And he
Yeah.
said, interest is not accidental. We didn't do it. It's part of what we are.
Yeah.
It's like, it's a phenomenon, like economics.
Yeah.
It's more of that train of thought. So I'm curious, what do you think is the current train of thought? Because right now, this week, we're doing this. Last week, the SVB seems to have imploded. There's other banks that are imploding.
Yeah.
Everyone has, varying views of why.
Yep.
You think, what do you?
If you ask me
first
what the
question
train of
is-
thought is, yeah. Let me answer
Sorry?
that. I don't think
Yeah,
there's-
help me out here.
Yeah.
It's so much. It's like overwhelming to try that.
I don't
But I
actually-
think Bombaberg has something to do with it, is what I'm trying to say.
So here's the thing. I personally don't think, if you analyzed it, I don't think there is a train of thought. Okay, my first glimpse, right, would be that. But when you actually look at what they're doing, all right, I actually think that their thought is malicious, right? Because basically after SVB collapsed, they took out a bank that didn't need to be taken out, that was tied into crypto, very, very heavy into crypto. I think it was Signature or one of them. Don't quote me on that, but
I think it's the Signature one.
yeah, they were capitalized, right? And what happens? You have now Chase, Wells Fargo, B of A getting record influx of depositors. And then to recapitalize the banks, they take the money and drop it into those banks that all the deposits came from. I think what we're in here is an intentional destruction of our banking system and our country. Okay. And I think it's going to get way worse before it gets better. And I think that the people, we either wake up or we lose freedom, right? Because central bank digital currencies are really, really, really bad thing. Okay. If you look at how they're used in China, if you look at how they're used basically anywhere they've been put into place, okay, they control, when you control someone's money and you control their food, you control their lives. All right. And that's basically what they're trying to do here. And so to create, I love digital assets. And I think that the world is going to adopt that, but we can't have it adopted with controls and with supervision, with Big Brother. The two don't work, okay? Because there's always some type of corruption at the top, and that is something that people have to wake up to. All right, they're switching over now. If you think about it, they're starting to switch over the Fed Now system. All right, it's only a matter of time before all this stuff.
Are you saying that the fear is, or that there's a possibility, if anything, that a natural reaction to the technological advancement of currency reflected through the blockchain evolution and all the different mediums that have come from that, like the Bitcoin and all that?
Yep.
That would potentially create a reaction of the states of the world to want to obviously compete with that technology.
Well, I don't think there's any competing. I think they're forcing.
Well, I mean, I couldn't imagine any other way that a state would compete.
Yeah, yeah, that's true.
Yeah, because the state isn't it's an agglomeration of people that have decided to put on, just like people that go in the military and protect us.
Yeah.
Those are people that have families, but they sign over their life, literally, right? They become something else. They become a commodity. So, and that's, one of the reasons we should respect the people that sell their bodies basically to protect our country.
Yeah.
Shout out to the veterans. That's like a big thing to have to do. Well, on the other side, I'm looking at the state, and it's like, what do you mean? I never met the state, meaning, someone comes over my house. It's like, if Mary works for the government, still Mary, but anyway. So,
well, think about it like this. Did you ever vote for central bank digital currencies? Did you ever say, hey, I think that's a great idea? No.
So, absolutely not. So, I mean, I don't think so.
No.
Yeah, exactly. So, okay. So, but, what I'm I just want to see what you think of this. Do you mean that these currencies, the excitement around them, around more autonomy for people, it's part of the excitement around them, that isn't necessarily going to happen if the governments get involved? Then that would kind of negate the whole thing.
Well, the point of having the whole point of Bitcoin was to create an actually sound money source, right? Or a store of value. Maybe not a money source because of certain limitations Bitcoin has, but certainly a store of value. All right, where you can't just print more out of thin air. You have to earn it, and it's going to be more valuable tomorrow than it is today, for the most part, right? And I think it accomplished that. So now what they're doing is, by having central bank digital currencies, and they, like in China, if you post something that doesn't agree or align with the state, or you do something, or their social credit system, right? They could shut off access to your money. Think about it like this. Right now, today, if something's going on and the market needs more liquidity, what do? We just print money, right? Or we do quantitative easing. So if in China, they need to do that, but they don't want to print money, you know what they do? They can make it so you have certain time limits on each dollar that's, so to say, in your account. It's central bank digital currency.
Okay.
Like it has to be spent in a certain amount of time. And what does that do? That increases money velocity. So it actually adds liquidity, or theoretically adds liquidity. I mean, if I just transferred money to you, right, and then you transfer it back for me, you probably reset the clock. Again, I'm not over there. I don't know how it works, but from what I've read, horrible situation. Don't want it to happen here. But that's not why I'm saying this is just one part of a very, very challenging thing that they're doing, right? So if you looked at 18 and 19, and even last time I was on the show, we talked about it. We printed a ton of money, we locked up businesses, and that created a lot of challenges, right? A lot of businesses failed. Our money is not as valuable. And we've been doing a lot of printing and very, very low interest rates since '08. And so now we kind of had to counter adjust, but we did it so hard and so fast that because of inflation, right? And they think they're getting a handle on it. I don't know if they are or not. And now they're going to be printing additional money and raising interest rates, which makes banks' balance sheets look horrible. Okay, which creates runs on banks.
Why do they look horrible? For the
Well,
people that just don't understand that. Yeah.
Absolutely. They buy T-bills, right? And so the way T-bills work is as interest rates go up, the T-bill value actually goes down, right? So if let's just say a T-bill is $1,000 at 5% and the rate goes to 6%, that T-bill would come down maybe to $900. All right, so now banks, that's what they're putting on their balance sheet, and that's not always, they're reporting it at what they bought it for, not current value. Okay, and there's a gap there. And so when you have a run on the banks, they don't have all that cash there. They have to sell those assets. They're selling those assets at a loss.
Is that because they made these long-term commitments to get a certain return that's locked up? So the only way they'd be okay if they made it to that period of time, but because they have to show losses on the to their investors because it's worth less in right now, that creates fear. Example, I'm trying to see if I understand this. So if I invest, I'm a bank and I invested into these treasury bills at 2% return for 30 years. And the rates have gone up. So now they're worth less because other people can get a return from elsewhere at a higher percentage. The bank will be okay over 30 years if they just were able to hold them, but because they have to show that they're worth less on their balance sheet to their investors, people get scared and then they take money out. So then the bank needs liquidity. So it has to sell at a loss.
I actually don't know I don't know if they're showing I don't know if they're showing current value. I think they showed the value they paid for them. I'm not sure. I would have to look into that and get back to you. Let's just put it that way.
I'm just saying, but am I kind of grasping the?
Yes, you absolutely have the right mindset and train of thought there.
Right? So what does that mean for our? Well, I guess can you go? I interrupted you, try to make sure I followed. So where were you going with that? Well, the interest rates are going up, the T-bills are going down.
Yeah. So right now, basically, the Fed is in between a rock and a hard place. They don't have too many levers they can pull. Right. So traditionally, the Fed can control rates and control money flow. They control money flow by quantitative tightening or quantitative easing, and they control the interest rates. Okay. So they've been raising rates, and now what it's doing is it's already slowing down a weak economy. Right. And by slowing down a weak economy, we're going to see more layoffs, right? We've been seeing a lot of layoffs. We're going to see more layoffs. And we're seeing liquidity leave the market, which is never a good thing. But they're doing this under fighting inflation. Okay. Well, they're getting to such a point where they're having trouble balancing these two things. And so what I said back in 18 or 19 is they could have done this. They could have started gradually raising rates a lot sooner. And now, if they start lowering rates, inflation can take off again. The only way I said this before, years ago, the only way out is a war. That's it. Because in a war, everything switched to wartime activities, companies convert, and they pump a ton of liquidity in, but it helps the economy, right? Because most businesses gear towards that.
Yeah. Meta narrative always drives behavior.
Correct. So that's, and obviously you see all the tensions right now in Europe, the tensions with China. This is very, very, very predictable. People that have been watching it, right? And I think some of it is intentional. I really do. And I hate saying that, but I think it is. So the macro stuff is always very interesting, but how does that impact every listener? How does that impact the entrepreneurs? Well, there's a couple things that are going on here. You can view this as doom and gloom, right? But it doesn't matter how you view it, because it's still reality, right? Sometimes you have to face the brutal facts. I think the first thing they have to realize is last 3 years have been tough, right? If you're still here, congratulations. If you're thinking about jumping back in the ring because, hey, you love being an entrepreneur, great. There's going to be a massive opportunity for the people that get through this. And I think step one is reframing how you feel and how you think about it. And think about it as a massive opportunity for the people that can stick it out and stick through this. I think two, focusing on your key business metrics, okay, making sure your personal credit's good, business credit is good, your cash flow is strong. Next, I would advise people that they want to have more cash than they need. Okay, so the best way to do that is a quick SBA loan that we have. And this is not me saying, I don't care where you get the SBA loan, but have more cash than you need, and that's on hand, right? Next, have access to cash. So open up and get a line of credit or a couple lines of credit. And then truly focus on your clients. Okay. What you want to strive for is everybody that walks in the door, everybody that you speak with, you want to create a raving fan. Okay. If you can get your entire team on board with everybody that we speak with better want to wear one of our t-shirts. Okay. They better want to tell all their friends. If you can get your entire team rowing in that direction, that will always help, because word of mouth means a lot more than some commercial. All right. And so if you can turn one client into two into four into 8, you're going to be all right. The next thing I would challenge every entrepreneur to do is go back at least 3 months, write down everything you guys spent money on as a business. And if you don't own a business, you could do this personally too. Okay. And ruthlessly cut out shit that you don't need, that is not producing a positive return, and monitor it at the end of every month. And then try to make sure that you are, if there's certain things that you absolutely do need. So when you're doing this exercise, things should fall into 3 buckets. Absolutely don't need it, get rid of it. Could, definitely need it, produce a positive ROI. And then you have that middle ground where, hey, it's helpful, it's not necessary. Let's see if I can get, better pricing, better terms, something along that effect. Okay. And ruthlessly do that. Because what you're doing is you're keeping your cash up, keeping your access to cash up, keeping all your metrics in line, over delivering for your clients, and ruthlessly cutting expenses. And if you do that, you're going to run a very lean and profitable organization through a very challenging time, which will allow you to grow and expand in excess of what you would have been able to do against other competition in different states of the economy. Because what's going to happen is a lot of your competition may pack up and leave. right? Which leads you to more opportunity. That goes back to the first thing we said in reframing how you're looking at this. All right, because everyone's going to be going through it. It's just a matter of who's willing to stick it out. And to stick it out and to stick through what we're going to be facing, you need to reframe it from doom and gloom to massive opportunity.
This is awesome, by the way. It doesn't get more actionable than that. And I want to unpack that, the buckets. But before that, are you saying that you think? Well, I think you made it clear. War, shit. But I totally get it. I mean, especially the war comment. You know, I look at like anyway, I'll this is what I want to ask. Simply, you're saying you think things are going to get a lot worse in the next 3 months, 6 months. And I want to acknowledge we had talked about this. You said a while back that inflation was not transitory to me. I think it was on the podcast, but maybe it was just us chatting and hanging out.
That was over. I saw, you know how you have the reminders in Facebook?
Yeah.
About a month ago that came up.
Yeah. So you've been saying that for a long time. And it was funny. I was watching a documentary last night on this topic of easy money. Just came out 3 days ago from Frontline, which is slanted left, but I try to watch everything so I can stay in the middle. And the Fed, one of the Fed leaders in one of the other states, I don't know his name, he was saying how, because they would challenge him on the transitory comments.
Yeah.
He said, well, all the reputable, just about everybody agreed with us. We weren't an outlier. He was so focused on, everybody was wrong, except, a couple people were right. But he wasn't the one that was the outlier. It was like, but you were wrong. Yeah. So it was just like, wow, but I get it. That's what happens with power. But anyway, it was funny because what you said, and so I want to acknowledge that. Okay, with all that, what do you mean by it's going to be worse? And so wait, you think it's going to get harder this year, and how long? Like in your mind, how long does it? What's your body tell you? What's your intuition?
I'm not smart enough to guess. Okay, I can briefly summarize what options they have.
You're honest enough that we should listen to you. That's what I think is good.
I appreciate it. So let's think about it this way, right? If they decide to reduce rates,
okay,
and pump in and provide more liquidity, inflation goes up, and maybe the economy picks up a little bit, but inflation will probably outpace that. If they decide to keep rates where they are, or inflation may or may not subside, but the economy is in a pretty weak state. If they decide to continuously raise rates, they'll get inflation down, but it will start crippling the economy. So of those three, there's really not much that there's not a lot of great options there. And
outside of an external conflict to create momentum and drive and purpose and meaning and death is energy transfer. Yes. I mean, it's a bit aggressive, but
but it's the truth.
I just want to acknowledge what you said earlier is that death is a energy transfer. When someone, I'll give you an example. Yesterday was my uncle's birthday and he died last year, and that was sad. He was like a father. I had a lot of fathers. He was like one of them, fatherly, because I had none. Yeah. When I went to this funeral, I saw people I hadn't seen in 20 years, and I thought, that's what this is right now for culture. Memories, conversations, values, reminders. Oh, I don't like this person. I like this person. Now we're talking, and maybe we'll talk again. Death is an energy transference. So that's just one element of death.
Yeah.
War creates meaning, purpose, initiative, goal planning, all the things that drive humans, but on a level way bigger than, the spat at the bar or at home, arguments with the wife and the kids or whatever, business issues. It's such a big existential.
Yeah.
Right? It brings all the existential conflicts to the surface. So it's like that really makes a country that's
It
any country,
galvanizes. Yeah.
right? Like a lot
Yep.
of flow, a lot
Yep.
of. So I just don't want to like lightly pass over your comment earlier that actually would be theoretically helpful. Well, of course, for the winner ultimately, but
Correct.
and truly, who really wins in wars? I just, it's a poetic. But,
Yeah.
anyway, so you're saying that I want to recap these scenarios. If they decide to reduce rates temporarily, like backpedal, inflation could go up.
Yep.
Or will most likely.
Will go up.
Okay. And that would inevitably just lead to more pain later, kind of
Yep.
thing. Okay. So that's one scenario you're saying. The other scenario would be if they keep rates where they're like, if they do nothing more.
Do nothing. It'll just take time, but it will probably, it'll still hurt the economy, but not as severe, right? And if they keep raising rates, you're going to have, you could see more banks, more bank collapses. You mix this
Wait,
in
I'm
with,
a listener. I'm thinking, wait, but where's the scenario where things are good?
well, that's the problem. Okay. Like you mix that in with the central bank digital currencies and everything else going on. This is a tough, challenging time, and I'm not here to be doom and gloom. Like Jay, you know me off of this. I'm very optimistic, right? I'm just looking at it from a very,
Honest.
different approach than most. And so, yeah, it's going to be challenging, but you know what? There's a lot of opportunity in that.
Well, I think the optimism comes from the awareness and action.
Yes.
The awareness of what's actually going on.
Yep.
Because we have to be honest. We can't lie to ourselves or others.
Mm-hmm.
And then we have to have a plan.
Yep.
We have to talk with peers like we are about the plan.
Yeah.
And we have to get up and do it in spite of the fear. We have to be courageous. We have to be the best of what we can be in the time of crisis. We have to be leaders. Yep. That's exciting. I think about anxiety all the time. It's like anxiety is the uncertainty without action.
Yes.
So like I'm anxious until I have a clear plan and I'm doing the plan. Yep. And then I'm excited.
Yeah.
If I'm confident in what I'm doing. I think about that a lot. So you're saying you're optimistic because of what you had earlier said, that if someone it's like I'm in a class, I'm going to recap here. They have 3 buckets. What do you not need? So go through your 90 days, 180 days of what you've spent as a business or as a life. If you work for somebody and you're listening to this and you want to own a business, but you don't yet, but you work for somebody, you could do this with your family.
Yeah.
Where are we putting our money?
Yeah.
What do we not need is one bucket. What do we need in another bucket? Yep. In the middle, it's like, what are we unsure of? Can we get a better term or a better price?
Yep.
That strategy is going to do what for people?
It's going to reduce your expenses, right? It's going to reduce your expenses. And at this point in time, I think everybody. So think about this. I believe in January or February, more people missed their car payment than in 2008. Okay.
Really?
Yes. We have 40-year lows in personal savings and 40-year highs in personal debt. All right. We are literally on a ticking time bomb right now. And we're in that because of our culture as a country. We've always wanted to keep up with the Joneses. We've always wanted to spend on the wrong shit. And I'm here that if we can change, if we do one thing, if somebody else gets more financially literate and understands that, hey, I need to save more, I need to invest more. And by the way, guys, there's not a whole lot of good shit to invest in right now because we're starting to see housing prices come down. We're starting to see, you see what's happening with stocks. All I can tell you is what I have done personally. This is the first time in my life over the last 6 months I've actually bought physical gold. Okay.
Oh yeah.
Yeah. It pains me to do it. I told you what I did, and guys, this is not financial advice. Okay, I just want to segment this, but I have made a corporate treasury for digital assets that has so far worked out very well. And I've bought physical gold. I have probably 6 months of food, at my house. I have I don't want to say prepared, but I am ready if and when things go haywire, right? And I've always been somebody that saved and invest a lot. So what you guys want to do is cut out many expenses as you can, save as much, find something or find things to invest in, and just work as hard as you can at making an impact, and pushing your company forward, or if you don't own a company, yourself forward. All right. Because everyone's going through a challenging time. That's not to say that I bet you there's more millionaires and billionaires made in the next, 3 to 5 years than any other time. Why? Because technology is getting better. There's going to be more opportunity, and you just have to kind of connect the dots, see where the opportunity lies, and take aggressive action towards it.
Yeah, I had a goal to let's just say be at a certain place at 30, and I achieved it.
There you go.
Since I was like 5. Now I wanted to own a laundromat, but I never ended up owning the laundromats.
Yeah.
But I would say the last 3 years has been the best for Culture Matter. There's a lot of pain before that, trying, but do you ever have any level of guilt, like when you're doing well and other people aren't?
It's a great question. No one's ever asked before. So yes and no. I donate to certain things that I believe in. And so that has always, I've always been able to tie my success, and the more success, the more impact I make, the more success I have. My impact is helping a lot of people. It's saving businesses. It's providing more jobs. And on the flip side, the more success I have, obviously financially, I've always given back more. So for me, I don't really have that guilt. And, you got to see what drives you. What drives me is building a legacy for my kids, right? My kids drive everything I do. There's no doubt in my mind. So that actually supersedes almost everything else.
What drove you before that?
Ego and confidence. Yeah, that's as real as I could be. Ego. Just wanted to be the best at everything I ever did.
You find that that's a commonality with entrepreneurs?
I do, and I don't think it's, if you can balance being humble and having an ego that drives you, or let's say true competitive spirit while being humble, I actually think that's a pretty good winning combination. Because listen, no one wants to be around a pompous asshole, right? However, if you're humble and you want to learn, and you can internally keep that competitor alive, and that competitor can drive you, but what you're still humble and you're a good person on the outside, that's a powerful combination. If you don't have that thing, that why, that's going to supersede almost everything else.
Do you think that having children can cleanse or rectify some of the ego stuff? It like levels people up. Maybe not everybody, but I'm curious if you've recognized any any likelihood that could, or even if it's just anecdotally with your own experience?
Here's the best way I could say it. Jay, I know you work hard. You work harder than, I would say, almost anyone I know. Okay.
Me?
Yeah.
Thanks.
You put in the time, you put in the work, you put in the reps, you read, you check every box that anybody would want, right? You may or may not think you can work harder. If I stared over you and pointed a gun at your head and say, hey, I need you to do this round the clock, and the minute you stop, you're gone. That's what it's like having your first kid.
Wow.
Okay. Now, having your second kid, you just added one person with a gun in the room. Okay. And I can't say this for everybody, but I will personally tell you that's how I felt. That's how I feel today. That's legitimately how I feel today. There were certain levels that I was at before my kids, and each kid just made me raise my game, whether it was subconsciously or what. It was like throwing an accelerant on a fire. And that's the only way I can explain it.
What do you say to someone what do you say to me? I'll speak for myself in the spirit of always authentic with you. I'm afraid I'm either going to give less to this, or I'm going to give less to the organism. It's still, yeah.
I think that you will figure it out. You'll be a great dad, and you'd be robbing yourself of something that I can only explain if you've been through it. Okay. Like, there is nothing I wouldn't do for my kids. I love my kids, and they drive everything I do. They also drive me fucking crazy, right? Because they're exactly like me. But I would tell you that it's the biggest challenge and the biggest reward you could ever have. And so by you worrying about that prior, you're doing yourself a disservice. Now, they don't pop out with instructions. Okay. There's going to be days that it's going to be very challenging, and you're going to fuck up the same way everyone does. And I did, right? I'll tell you, and I can't believe I'm going to say this live on a podcast, but one of the things that I messed up early on with my kids, I lived 45 minutes away for, let's say, the first 5 years of my oldest life and the first year of my youngest life, from work to the office. And so I would routinely work, let's say 7:30. I would get home till like 8:15, 8:30, and they'd be up. Why? Because they wanted to see dad. I never put the two and two together. They still stay up late to this day, okay, because of that. But what I did learn, and I learned this from being around like Ed, my lad, in Arate, is you want to make the time count, right? To say that anyone's going to have a perfectly balanced life is complete bullshit. So one of the things that I've been much better at is being present and planning things. So yeah, like I might not get to spend all the time I want with them, but I make that time that I do spend with them count. And that matters a lot more, right? And then also, it's amazing, like they learn so much just by watching. And with me doing 75 hard every year and all these things, like I have my oldest, he's 8, he'll be 9 in August. He wakes up, he works out, he does his chores, and then he's up. Like, that's what I was telling you earlier. Like, he was up at like 6:30. Wow. Getting after it. And
yeah, this is a Sunday, by the way, for the audience. Like, yeah, we're doing this on Sunday.
Yeah, so to see the impact you can have on another human's life, particularly your own, is pretty powerful, man. So don't let, you're doing yourself, and, get after it. You'll be a great dad, and it'll work out.
I'm going to tell, as soon as we get off here, I'm going to tell Jenna, Jonathan says we have to do it right now.
Right now. That was like my best man speech. I had a best man speech, and that's how I ended it.
Dude, you're the man. I really appreciate it. And hard to argue that. It made, while you were articulating that, when you said, I wrote this down, they learn so much by watching. I thought of for a sec, because I'm always right in the books, in the field, in the work. My mind immediately goes to a business and employees. And there's just always been so many parallels for me in the two. Like, they learn so much by watching. I think it's the same experiment. It's not an experiment, it's a life, but it's the same life lesson in a business setting with a business culture that people learn by watching.
Yes.
So in the spirit of that statement, what have you learned over time? What works? What doesn't work? What would be advice to business owners of how you've been able to live out these very clear, in my mind, this very clear philosophy of what products you're not going to be a part of, what products you are, how you're going to relate to the customer and serve them. That's my question. Like how what hasn't worked, what has worked when it comes to translating that to your people. What advice do you have for people around that?
Well, I have everything documented, right? So when I bring somebody on, they usually spend first 3 or 4 days watching videos. I have them write down questions. I help them answer the questions, right? So most people go through a program I made called Capital Gains, teaches them the basics. And then we have everything in Trainual for any position in my company. Everything is in Trainual. They go through Trainual, then they take the tests. We ask them questions. They ask questions. We answer, and then we have people get shadowed, right? And if someone's struggling, I usually like to have a quick meeting in the morning, but my meetings aren't, hey, rah rah, we got to do this or we got to do that. It's looking at data, looking at numbers, and then from there, figuring what message or what educational message would help solve that challenge, right? And after we do that, if I see someone really struggling, they can shadow me or somebody in the company that is really good at where they're weak, and that's kind of how I've done that, right? It's definitely not a perfect system, and by the way, I only found out about that credit card stacking program because we used to offer it and I didn't realize what it was doing, and then when I realized what it was doing, I cut it because
That's
on the surface level, 0%, and then you learn more about credit and how everything works, and you're like, oh shit, I just gave this guy a ticking time bomb, So I've made plenty of mistakes, but if I make a mistake, I own it and I correct it.
Wow. How'd you find out?
Credit reports a year later, 6 months later. That's basically
how important is it for a business owner to really know their business? And then how difficult is it to not know everything because you're growing, right? There's a natural tension there.
I don't think you're ever going to know everything, right? You are always going to step on a landmine. I think the biggest thing is, what did you learn from it? And can you ensure that you never step on that landmine again? And by the way, that landmine might come in different sizes, shapes, and colors. Okay. One of the most attractive landmines for me to step in personally is, and this is center of my focus because I'm reading Good to Great again, but phenomenal book, by the way.
Yeah.
I go and I try to do things outside of my core competencies or things that don't push the main objective closer, like investing in gyms or investing in some other things, right? And anything that diverts my focus as an entrepreneur has been killer. Like right now, I'll give you a couple that I am working towards. Right, we are working towards a way to reach out to a lot more clients, a lot better, a lot faster, and kind of replicate me down the line. I'll leave it at that. So that is a project that totally aligns with everything that we do, and it's going to allow us to impact more people. Another thing that aligns with everything that we do is we brought on, and I was telling you, the family office, right? So we have a program that people can get 10 million to 500 million.
Wow.
Okay. On probably the most attractive terms I've seen besides the EIDL. It takes a long time, not for everybody, but for those that it's for, it's a complete game changer. So those are two things that totally align with everything I'm doing. So as a business owner, I think if you can just focus on the thing, be the best at that thing, you're going to be a lot better off over the long run. And I'm speaking from personal experience of things I've messed up.
We talk about these buckets earlier, what we don't, if we're doing financial forensic of where we've been the last X amount of months to lessen these expenses. Bucket one, what do we not need? So obvious to us. Bucket two or bucket three, I have it in my head that way. What do we want? We can't get rid of it. Bucket in the middle. What are we unsure of? Can we change the price? Can we change the terms? I love that. And so my question within that is, if the idea is to lower the expenses, how, and that's what we're charged to do, is there any room for investing or spending? Because we could call it investing, but ultimately it's also spending. So is there any room for spending? And then how do we know what to do it in? And then I guess earlier you kind of answered this, obviously, when you said, now I'm thinking earlier in the conversation, what's the cash flow? What's the hurdle rate? What's the, right. What's the, what was the third one? We never talked about the third one, actually. Anyway, so always a wealth of information talking to you, Jonathan. This is so much fun. So my question is, damn it, if we're trying to not spend, what do we spend on? Or do we not spend anything? But then theoretically, if we did that, obviously, if everybody did that, then the whole thing would really
come crashing down. All right.
So how do we make a choice of what to spend on? And we call it investing.
That's a great question. It depends on a lot of different factors, but let's just throw out something that I always talk about on Financial Fitness Friday. Okay.
Wait, what's that? And where can people see that?
That's on Facebook. I do it every Friday. I also do Mindset Monday. If you just follow me on Facebook, you could set your alerts and that comes up, or awesome. They all get posted late, but it's all relevant, right? I try to do evergreen strategies. I don't want to talk about some trend. Okay. I try to give evergreen information. If you look up integrated business financing on YouTube, they're all there. So
integrated business finance on YouTube.
Yep, financing on YouTube.
All this value, you might as well plug yourself here. Okay.
Yeah.
Okay, great. So yeah.
With that being said, I think that everything needs to run like a financially proactive individual, right? So I think you should keep your hard costs to your life and company. This translates, guys, to everything. All right. No more than 40%. The lower you can get that, the better. So if you're making $10,000 a month and your mortgage is $2,000, all your insurances and your car are, let's say, $1,500. The lower you can get your fixed costs, okay, what you need to live.
The personal life.
Personal or business, it's still the same. Like it all operates. Think about like a pie chart, right?
Okay.
If you have fixed costs, right, you want to keep them as low as possible, but you still want, you want to monitor those. So let's say it's no more than 40%. All right. For a company, that would be rent, payroll. All right. Now, what's variable? What's an investment in a company? Well, marketing. Okay. You need to market. I don't say you ever should cut marketing. Good times, bad times. No, absolutely not. Profitable. Hold on. Let me put a caveat. Profitable marketing. What's your ROAS, return on ad spend? So if you're spending $1 and getting, $2 back, why are you going to cut that? That doesn't make sense. And in your personal life, investing, like, hey, I tell people they should invest 25% of what they bring in. They should save 25% of what they bring in. Guess what? As a company, you should also be doing the same. All right. So for me, I started putting a sum every week. And guys, here's a little trick to company and business life. Make it automatic so you don't think about it. Okay. So I do it weekly. I have weekly money going into a stock account. I have weekly money going into a corporate treasury of only Bitcoin and Ethereum. Now, I'm not telling you to do that. That could be risky. This is, again, do your own research. Don't go off of what I'm saying. Although what I've done so far has worked out very well. And so 25% savings, 25% in investing, and then you have 10 discretionary. Now, if you want to get crazy, right? If you want to get super aggressive, throw the extra 10% or maybe 5% of that 10, throw it into investing and then only spend 5. All right. I'm not telling you, it's kind of like a diet. If you stick to a diet that is so strict, so rigid, one day you're going to snap and eat 3 pizza pies. Okay. This is the same. Do it, make it. This has to be a habit that you stick with. All right. And so what happens is now we're in a time that everything's going down. Well, if you have a 10-year window and you're making the right investments, guess what? You're putting them in and you're getting them on sale. So when this thing turns, and it will turn, guys, okay, it will turn. When it does turn, you're going to be in the best financial position possible, and you're going to be wealthy, right? By adopting these little habits. And I think your business is no different than you. And the problem is people don't treat and view their business that way.
How do they treat it?
Well, it depends on the person, but some people treat it like a cash cow that they just go out and they buy things that they don't need to impress people they don't care about.
You mind saying that again?
They buy things they don't need to impress people they don't care about.
God. 40%, 25%, 25%, 10% is when we talk about, so the 25% saving, for example, would you consider that, let's say money's flowing into the business account and then it ends up in the personal, obviously a lot with businesses, a lot of things, there's so many advantages to having a business that you actually work. I want to preface this for people that may or may not fully understand it yet. Maybe they're like a high paid executive and they make great money on paper and they unfortunately, take home less than it says by a lot on paper. But the business, it's flowing through the business and it's coming down to you eventually. But by the time it comes down to you eventually after tax, you've lived a certain lifestyle based on what you can write down through the business. That creates a lot of opacity or gray, subjectivity, right? Like confusion where you need teams. And then, okay, so with all that being said, when you say the 25% savings, do you mean, for example, the business is saving a certain amount of for working capital?
Yeah. So think about it like this. I actually loathe profit first. Okay. Because it puts people in a position that they don't actively manage well, even though the guidelines are there. And yes, it does work. The challenge is now you have 7 accounts, you're paying account fees on 7 accounts. And most of the time, the reason why I don't like it is because if you go for equipment financing or a line of credit and you're sweeping out your operating account and not keeping enough in there, it looks like you don't really have a lot of cash. And a lot of these banks underwrite through algorithms, which profit first will throw off. So
can you explain profit first to people that don't know anything about that?
Sure.
That
profit
philosophy?
First. Yeah, what they want to do is they want to make it so for every, let's say, dollar in, right? Money is everything comes into the operating account. Then you have an account for taxes. You have an account for profit. You have an account for payroll, and there may be a couple other accounts that I'm missing, right? But long story short, for every dollar that comes in, it gets divided amongst these accounts. So you know what your profit is. You know you have payroll covered. You know you have all these things covered. and there's no surprises, right? But what it does is when you have that, okay,
It just sounds like Mark. It sounds great on paper.
it sounds great on paper, right? It sounds amazing.
It sounds like
Yeah.
like Lenin's idea of
Yeah,
Russia.
I was just gonna say that. It's like communism, right? It
So
sounds
maybe
great.
we just like, maybe we're the idiots though. We just agree, right? We're just agreeing.
No,
Maybe,
it's
maybe
very,
we're stupid. Maybe we don't know. I don't know.
it's very similar, right? So yeah, communism sounds great. Everyone's equal until you're not handing out anything.
There's no bread.
Yeah, there's no bread. You're waiting a day for bread. But what happens is a lot of people keep that operating account next to zero. And so when you go to get financing, unless it's an SBA loan, it makes it problematic to get approved. So my suggestion is you have a business checking, a business savings, and you move as much over into the savings as possible while keeping at least 10% of what your monthly revenues are in your operating or checking account at all times.
Would there be an issue with just keeping it in the business checking?
No, not at all. Not at all.
So, but okay, I have another question. This 40% that you were talking about, and you're talking about. So I'm just going to say the pie. The pie is 100%.
Yep.
So let's use easy numbers. $1 million.
Mm-hmm.
So there's $1 million, and in your mind, how can we operate at 400 a year, 33 a month, and repeating? If that million, and the other amount, it's like I'd like to have a saving of working capital.
Yep.
Like a cushion.
Yep.
In a sense. And how are we taking 25% of this million and investing? Now, investing is a very broad terminology. Could that mean investing into more infrastructure in the business? Could that mean investing into external assets that add value to the business? But essentially the idea is the investing could be in the business,
Yes.
not outside of the business.
Yeah, it doesn't have to be it does not have to be outside. Think
but
about
the
it this
idea
way.
is that you want to have 25% because you could easily increase. Correct me if I'm off here. By looking at it like 40% fixed, and you include your personal life in that as much as possible, that would then theoretically really force someone to look in the mirror and say, based on how much actual money comes in that business and what the actual profit margin is, the actual operating profit, what lifestyle can I really afford to have? Because if I could easily live maybe at 65% fixed costs between the business and my life, because I'm not thinking of that investment 25%. Yeah. So I could lie to myself, like how you said.
Yeah, but think about it this way, right?
Is that what you're kind of one of the values of the percentages though? So someone is less self-deceiving because that whole thing about I just read a great book about this. It's called Wanting. I could send you the book, an audio for the listener. Wanting. It was memetics, like we all compare each other to each other. So there's a destructive element of that, where what you said, we spend things on we don't need for people we don't like. I think that's what you said.
Yep.
So part of listening to Jonathan's advice here, guys and gals and everybody, they, them, Zizzer, whatever. So is then you can compare who you actually are versus who you might try to posture to be based on who you don't like and what you don't care about. What I just said. Anyway, what I'm trying to say here is, what am I trying to say here? 40%, 25% investing is like, if you don't do the investing piece, you might end up spending too much money. I guess that's what I'm trying.
How are you going to move your company forward, right? What initiatives can move your company forward? Let's think about this. Marketing, adding key people, right? Because people are absolutely an investment. They're probably your greatest investment. So this gives you permission, if you will, or a budget or an obligation to keep moving and progressing forward. So you can put it into people, you can put it into marketing, you can put it into new technologies, right? I don't care where you put it. Think about what's going to move the company down. It could be equipment. What's going to move the company the most? Okay. And if you're
And if
picking,
you don't do that, you're saying that it increase, well, you're not saying this. I'm saying this. I want to know if you think this is the right way to, this is one of the values of taking your advice. If someone that's listening to this doesn't do that exercise, they may end up living above their means,
100%,
destroying
or
their
they're,
business.
yeah, or what you're doing is you're robbing your company so you can live a lifestyle that you don't fucking deserve to live yet, right? But if you do it the way I'm telling you, you'll eventually get there. Think about this. Anytime you sacrifice,
What about
okay,
Instagram?
yeah,
I
yeah.
don't like this advice.
Yeah,
I don't want to be me.
Think about it
Why
this
are
way.
you so righteous?
I'm
What are you,
not
a priest
righteous.
on the side?
I'm just trying to help people get there.
Satirical.
I know. But think about it this way, man. Like if you are sacrificing, you're gonna have a long-term payoff in the end. Okay. So yeah, you're not spending that 25% on you. You're spending it on the company, which grows the company. And then eventually that your 40% exceeds what would have been that 65% if you were just spending it on you anyway. Okay. So just if you do things the right way and you don't rush shit, okay, because everyone needs instant gratification these days, you'll get there. And you'll probably get there a lot faster and you'll be a lot better off. And then you're not robbing your company. Okay. You're not robbing. And think about it. What are you really doing when you're robbing your company? Okay. You're not just robbing the company or the entity, you're robbing your team and you're robbing your potential clients and you're diminishing the impact that you can make down the line.
Culture matters.
Culture matters.
This is a great way to look at things. Actually, I would argue positively, constructively create a culture that is idea meritocracy, inclusive, more self-aware, more honest, more responsible. And it does start with the ownership is my view of it, is how the leaders behave and interact with all constituents.
Yeah.
So I really like amazing, because it's simple, it's really helpful to look at it that way. I think that impacts the culture.
It's a guideline.
The person that's not doing that ends up not being aware that they're creating entitled, resentful people that work for them. And then they're in above their head. And then they're anxious and afraid and reactive without being aware of it. And then they start selling things that aren't as good for the cut. I see the spirals, right? I see this every day. So, but what are some of the elements that lead to poor behavior? It's incentives, it's structures. So this is really good stuff. Now, my next question is the miscellaneous 10%. Is the idea, I wrote miscellaneous because I wasn't sure what you meant by that. Can you just unpack that a little bit more?
Yeah, so think of the miscellaneous as discretionary income. Okay, because if you stick to something that is super rigid, you can stick to it for a pretty long time. But when you actually go crazy or break from that rigidity, you're probably going to break so hard in the opposite direction that you're going to do real damage. So if you can build in no more than 10%, and you can follow that pretty easily. Now, if you want to be aggressive and maybe put half of that 10 into investing or half into savings, and then just spend 5, yeah, that's being aggressive and still staying within that framework or enhancing that framework. But having that 10%, that 10% could be something like, hey, I'm going to this event, or I'm going to do a company retreat, or I'm going to pour back into my clients, right? So I don't think a lot of people do that, and I think that's a really good way to create raving fans. Like, hey, if not to give away the secret sauce here, I don't think it's a secret, but if we work together in a meaningful way, with integrated, I pull your logo off your website, I burn it onto a tumbler, and I send you a handwritten thank you note. All right. And that usually comes about a week or two after you got the funds or after you set up your payments. And that's just a way to show your clients that you actually give a shit, and it keeps you top of mind. So I don't need every dollar for my business. I rather spend the money. So what did I have to do that? I had to buy a laser printer or a laser cutter. I had to buy a shitload of tumblers, and I had to pay somebody to do it. But at the end of the day, that builds the brand, that builds the loyalty, that builds the relationship with the client. And that is money well spent. That really doesn't really cost a lot. It's just more effort showing that, hey, I give a shit about you than anything else.
It's so interesting psychologically because I'm thinking it's hard to do that if I got my Ferrari payment, but I can justify my Ferrari payment if I'm getting new relationships all the time because I look successful. I don't need to really put money back into my old relationships. See, that's a really dark thought though.
Yes.
And so ultimately, when it comes to the culture, people can build the culture that they are, or they are. That's what we do. We build the culture we are, whether we're aware of who we are or we're not.
Yeah.
And there's lots of ways to get power. So that works for people.
Yeah.
To get and also by saying that, I'm not discounting the people that maybe they have the Ferrari because they're unbelievably so well put together economically that it's such an inconsequential whatever. So I'm not discounting the brand or the product, or I'm trying to make a point here is that if we're in the beginning, we have the same amount of money. We have to figure out what to do with this resource.
Yep.
I can pay that payment, that $3,500 a month exotic car payment.
Yep.
Or I could take that 42,500, I think it's 42,000 and 42 and a year and put it into these cups.
Yep.
And that seems like expensive ass cups, but I'm just like trying to, maybe I could put a party together for my people.
Yeah.
I can't do that if I was trying to say hi. Right. I can't do that if I'm paying that 42,000 a year on the car. But if I had a truck that's even 1,000 a month.
Yep.
I have that difference. What do you call that in accounting? The delta.
Yeah.
Yeah. I have a delta of 2,500 or 30,000 a year difference that I can put into my clients.
Yep.
Is it that type of thinking that makes a business owner mature? Or I want your thoughts on that. And because you talk to business owners every day, all the time, you're one of their advisors essentially, because they need capital and education. So
I think
the business owners that's thinking this thought.
Yeah,
I
think it helps. I do think they're mature, right? Like I'll tell you this: if I was making the money I make today when I was 21, what would I have done, right? Probably not what I'm doing today, right? So there is we laugh at it, but think about it. Like if we went back in time and 21-year-old Jay was making
Lamborghini, buddy.
Yeah.
Lamborghini.
Yeah. So
21. I think I was working at Tiki Bar.
Yeah. So exactly.
I was a bouncer.
There you go.
22. I was dancing. I was a stripper.
There you go.
I talk too much, so I wasn't good at it at all. So it wasn't in my fate. Here I am.
There you go.
You can always reinvent yourself, my friends.
That there is a ton of truth to that too.
Yeah, you said 21. All of a sudden, oh boy, those are memories.
Yep, exactly.
So are you alluding to that at 21 you would have done what we're saying?
Oh, I would have supported single moms and some bad habits I had. That's just the truth.
Yeah.
And hey, that's part of growing up and being mature. At 21 you don't have a mission. What is your mission?
But what about 41? I mean, a business owner that succeeds.
Yes.
They succeed. Now, how do we define that?
But why do they succeed?
Their business produces
making sacrifices.
I'm sorry?
They're succeeding because they make sacrifices. Time, effort, money.
Okay, so let's go on that train of thought. So let's say they do that, right? And they do that for an extended period of time.
Yep.
It's worked.
Mm-hmm.
They could be in their late 30s or mid 40s or late 50s or any age and not invest in their clients anymore.
Well,
Not invest into the culture because they have power.
but
They
I
can-
I disagree.
What do you think? Yeah.
Here's why. Because if you're doing this and you're keeping this system, okay, remember, let's go back to that pie chart. That whole pie grows, right? So that 10% of discretionary, that let's say you were spending $2,000 a month, and that was making up, half of the discretionary. Well, guess what? That 10% should have grown so much that, and yes, you could say, hey, you have more to spend and more to put out. I bet you that has grown disproportionately larger than the amount that has to get spent. So you can still spend that. Your 40% grew, your investing grew, all of it grew to the point where whatever you want at that point can then be absorbed. So the point is, make the sacrifice, do things the right way, do it long enough, and you continuously learn. Because listen, you're going to make mistakes. Those mistakes are tuition payments. Those tuition payments allow you, as long as you learn from it and don't make the same mistake twice, to continuously grow that pie. And eventually that pie can absorb everything that you want.
Oh, this is awesome. So this is awesome because I want to share a bit of the thoughts that I've been trying to working theorem, essentially. It's my belief that there's certain elements that if they're not inputted, it's not an input. The output is, and I'll explain what the inputs, the output is that person will be less and less, that person in power, able to differentiate if they've learned from the mistake or not. Because as this pie grows that you artfully explaining, my belief is that if that 40% fix that you were talking about,
mm-hmm.
It's tied to the ethics, to the character of whomever's in operating control,
mm-hmm.
like their moral choice, what they don't do and what they then do
mm-hmm.
in both their personal life and their business decisions. And if it's not clear on what they don't do, then it isn't clear on what they do. And as time goes on, if that 40% grows to, let's say, a toxic 70%, that over time shrinks not only the margin of the business, like the actual potential for profit,
mm-hmm.
which negates potential for innovation and redevelopment. It slows and stagnates. It's almost like cancer builds in the equity in the organization, because how they relate to others, how they interact, changes and alters how other people interact. It's like almost like a giant domino. So I'm trying to affirm the value of this pie you're talking about. And I would argue there's certain inputs, certain behaviors, certain things that if they're done, like everything has consequences, everything has input, output. So as a leader of an organization, going back earlier in the conversation, what you said, your children, they learn from how you act.
Absolutely.
And I'm not, so when I'm saying this, I'm trying to.
I have a good way to put this.
I'm sorry?
I think
help me out.
Yeah. So think about this. There's two things that reveal who somebody really is. Okay, because exactly what you're saying, I have someone that is personally in my life that has done this, and I'll just leave it at that. But two things reveal who somebody really is money, alcohol, money, alcohol, power. Okay. You want to see who someone really is, and you give them enough money and it gets to their head, they do a lot of stupid shit with it. Okay. I have personally seen that. Someone that built an amazing company, built a great family, and has put it all in jeopardy because he got so much money, it went to his head. Okay. Same thing with alcohol. Get somebody drunk. I'm not saying you do this as a strategy, but if somebody gets drunk, they reveal.
Zoo's on the podcast, guys. Welcome to Zoo, the art of war.
They reveal who they really are, right? Or if you give somebody enough power and control, you can see who, how they're going to use that power and control. Okay. And so to your point, if you have somebody that has a small pie and he's growing it, and then all of a sudden changes the framework and construction of that pie. Okay, well, one, that pie is probably going to stop growing. And two, that person is revealing who they are. And as that person reveals who they are, okay, maybe it wasn't clear at first to whoever was on their team, but if and when that happens and their team gets wind of that, well, that creates a negative feedback, right? Team's going to stop doing or performing the way they were. This guy's going to probably double and triple down because he's not aware. Because if you're aware, why would you do it in the first place? More negative results, more negative adjustments, more negative results. They're out of business. So I agree with the thought.
And oftentimes you can actually see someone succeed at a very high rate in spite of all this. And what actually is sacrificed is their interpersonal community. That's the family, that's the relationships, and at some level, all entrepreneurs at some level have a season for this.
Yes.
In their historical narrative.
Yep.
It's one that it's never reconciled, that eventually they could become the super billionaire that is essentially swallowed up kind of like
Yep.
by the whale in a sense.
Yeah.
They've completely lost sense of reality for what, this is like, yeah. I study, I'm obsessed. I love that journey. And that's a big piece of what, Culture Matters about is trying to work with, let's say, anesthetizing that or not, there's an anesthesia element in the beginning, and then inevitably it's what's the panacea, what's the cure, and how to come to that. Because I wouldn't want anyone to get the image that you have to be a priest to be or a saint to be successful. You actually don't.
No.
Because then you just be a saint. But you can build something amazing and not lose yourself in the process. But you don't have to actually be a good person to build an amazing, a very powerful organization. I just don't want to work
Bill
with
Gates.
I just don't want to work with those people.
Yeah.
Because I don't want to be that, right? But I do. Anyway, this is what a thought-provoking.
Think about this.
Conversation.
Bill Gates is probably, listen, this is my opinion. He is probably one of the most evil people walking the earth. But he built Microsoft. Okay? He built massive organizations and he's wildly successful. So no, you don't have to be a saint to do really well. Okay? Again, this is my opinion. It's not fact, but that's how I feel. There are ways, if you have a structure, I think the biggest part is identify the mission and the impact you're trying to make, build a structure around it, and stick with that structure and regularly check back to make sure you're in that structure, right? Because I'll give you an example. Sometimes you do have surprise expenses, or sometimes you double down. Like last month, I know I spent probably 2x on marketing that I normally do. Well, obviously it's done what it was supposed to do, but that exceeded that framework. So this month I have to go back in and kind of adjust. And if over, let's say, a quarter or 2 quarters, you're still well within that framework, that's fine. Okay, it doesn't have to be so strict and rigid, but over the course of time, you need to stay within that framework, and you have to make sure it's getting results, because there's certain times, like any investment, it could go to zero, right? I could spend a lot of money on some new technology, and new technology doesn't work, and that's a loss. But if it was in that framework and I learned from that lesson, all right, that's a lesson I'll carry forward and figure out and analyze why it went wrong. And if I want to try it again with maybe different people or different technology, I will, because it's within that framework. Sometimes it doesn't pay, but sometimes it does. And you're not looking to hit a home run on every swing, but you definitely need to progress with doubles, singles, and triples, and eventually you'll hit that home run or grand slam. Okay, and eventually, and you will strike out, but learn from the strikeout.
What's your biggest lesson of 2023 from any type of strikeouts?
Well, I'm still dealing with the lessons of 2020. No, I mean, listen, from a business perspective, Integrated's blessed. I think the biggest lesson for 23 was if you can find a program that is, or a super, super high ticket thing like I have with that 10 million plus, it changes the game for you, right? Typically, the larger the transaction, the more sophisticated the borrower, the better I get along with them, right? And the easier it is. And so we probably have, just in people interested in that program, and I haven't marketed it, close to 90 to 100 million that can go out over the next 12 months.
Amazing.
That's in addition to what we normally do. Well, last year was our first full year in operations, and we still put out 30 million. So to go up, to have the ability to go up 3 to 4 fold in a year by just offering something that's a little bit above market or a lot above market is a massive win. Okay, from a personal perspective, what did I learn over the last, let's say, cumulative 3 years is I tend to chase shiny objects like most people that don't meet those the hedgehog concept, if you will, and they've blown up spectacularly in my face.
What's your advice to someone?
My advice is be the best at that one thing, pour everything you have into it, and ultimately look to make the biggest impact you can with that one thing.
You think people have to learn that the hard way at some level, that pursue the entrepreneurial
Yes.
endeavor?
Yes, and so you will probably wind up repeating and reliving that lesson a couple times if you're like me.
What do you think's the reason?
I didn't learn the lesson the first time. Wasn't the first time.
Powerful.
I didn't learn the lesson the first time.
How important because you mentioned Ed earlier, who's prolific. I mean, his new book, One More, The Power of One More, is what a great book.
Yeah, that was great.
So this idea of mentors, helpers, serve those to serve, coaching, how important has that been in your career? Or, and if not, why not?
I wouldn't even be here. Like, so being around the right people and having the right coaches, consultants, mentors is everything. So I'll give you an example. Without mentors and being around the right people, I would have still been at my last venture or company where it was a 50-50 partnership, and it just wasn't a fit, right? Without the right coaches or mentors, I wouldn't be doing the amount of business I'm doing. We wouldn't have met. There's a lot of different, I mean, I have to tell you, like, having the right coach, mentors, and also being around the right people that get you, people that are also pushing to make an impact, is a real game changer, right? You need that in your life. You need that in your business. You want your team to be surrounded by that, because that raises the bar for everybody. Okay, that's a big part of setting the right culture, right? How can you have the right culture if after you're done working, you're out partying, or you're with other people that aren't part of that culture, or aren't part of that journey that you're trying to be on? It just doesn't align. When you have everything aligned, that's when you're going to make the most progress in life. And I think another part of that is like, hey, what are you feeding your brain? Like, think about it. Everyone talks about what you feed your body. Inputs in equal outputs. Okay, if you put bad food and bad stuff in your body, your body isn't going to perform. Well, your mind works the exact same way. Okay, so if you're around people that make you think, if you're around people that are always putting in the work and putting everything into action, well, you're going to be putting everything to work and putting everything into action. So it's a massive positive feedback loop, right? Your life, your business is either going to be in a negative feedback loop or a positive feedback loop. Okay. The more times you're in that positive feedback loop, the better you're going to be, the more wealth you're going to create, the bigger impact you're going to have.
What do you say to the person that's listening that says, that all sounds great, I just don't know how can I swing that, right? They're looking at their 3 buckets right now.
Yep.
And it's so clear that they went a bit overboard. Maybe, they know what they need to get rid of. They think they know what they need to keep. And there's this big bucket of maybes they're unsure of. And then, you're telling them to add another one in that bucket. Maybe they've never had anybody help them before. Right. So now they're going to put that in the bucket of maybe. How does someone start?
It can't be a maybe. It has to be a must. 2, if you don't have the money for a mentor or a coach or a consultant, books are damn near free. YouTube is 100% free. Okay, vet the people that you're reading, vet the people you're watching, and watch as much as you can. And don't just watch it and read it. Okay, actively highlight it, take notes, and figure out how it relates to you and how you can put it into action. Anybody can do that. And that doesn't cost you any money. That's effort. That's time.
What about if someone does want to take the leap and go to the next step? Is there a percentage in that pie for the help?
That's
in your
investing.
mind? What does that fall? That falls into that bucket or that part of the pie?
Yeah, that's absolutely investing, right? And if you don't want to take it out of the business investing, you can take it out of your personal investing, because you're, at the end of the day, you're investing in you, right? And when you invest in you, you're betting on yourself, and as long as you do the work, you should win.
Jonathan, this I didn't realize the alarm went off. I was like, we could talk. This is we got to add another hour next time when you come on. We'll have to start doing 3-hour episodes. I got this Adam Smith book just staring at me after this conversation, The Theory of Moral Sentiments. I'm like, I got to go read that after this whole conversation, because it's like makes me think of that book, some real depth today, man. What would be one theme you would put on this show for the audience? Like, what do they need to be thinking about, and what's your final call to action?
I think if you're not operating in a system like we've discussed with that pie chart, you need to start building that. And the reason I say you need to start building that is, in good times, that's really going to work great for you. In bad times, it's going to be the thing that's keeping you afloat. Okay, because right now we're all going to be facing challenges. We're all going to be facing certain hardships and difficulties. And it will create a massive opportunity for you on the other end of that. You just have to get to the other end of that. All right. So now is the time that, hey, if you work hard, well, work harder, right? Make a bigger impact, overserve everybody. And if you can do that successfully, the next 5 to 10 years, you're gonna kind of reap. You're planting all the seeds, and when it's come harvest time, you're gonna be all right.
Brother, thank you so much for this. Everyone get a follow Jonathan on Facebook. Check out those Financial Fitness Fridays. What was the Monday one?
Mindset Monday.
Mindset Monday. We'll see you again shortly. Oh, actually, episode 92. Completely different conversation. Check that out in the Culture Matters podcast with my dear friend. Thank you for this, and we will see you all next time on the Culture Matters podcast. Thank you.